Essay 250. Consideration of laws and regulations in an audit of financial statements. The auditor's objective regarding various laws complaints are he need to obtain general understanding of legal and regulatory framework and he need to obtain general understanding about compliance with the framework. He need to identify legal and regulatory framework having direct effect. Obtain sufficient and appropriate evidence regarding compliance. Identify legal and regulatory framework that may have material effect. Other laws identify instances of non-compliance by following two procedures: inquiry with those charged with the governance or management, inspecting correspondence with licensing or regulatory authorities. Laws other than above not required to perform audit procedures unless identified non-compliance is identified. Lastly, shall remain alert regarding other audit procedures may bring instance of non-compliance or suspected non-compliance. Next, take the written representation. Request written representation that all instances of non-compliance or suspected non-compliance affecting financial statements are disclosed to the auditor. Indicators of non-compliance. Hint is C puppet. C. Payment to country other than source. Another C. Unusual cash payments. T. Unspecified payments to related parties. U. Unauthorized transaction. P. Purchase price high or low. A. Agent fees or communication. Commission in excess. Agent fees or commission in excess. T. Tax haven transactions. E. No foreign exchange documents. Next, investigation. Unusual legal fees. Document audit trail goes missing, payment of fines, adverse media coverage. These are the indicators of non-compliance. Audit procedure for non-compliance. Information concerning non-compliance or suspected non-compliance is obtained by the auditor, understand nature of the act and circumstances. Further information for possible effect of financial statements need to be evaluated, discussed with those charged with the governance or management. Does not give true and sufficient and appropriate evidence, consider need to obtain legal advice. If still no sufficient and appropriate evidence is obtained, then modify as per SS 705. Also consider the effect on other aspects of audit like assessment, reliability of written representation, and take appropriate action. Next, reporting in sequence of importance. Reporting to authorities. When auditor has come across any non-compliance, then following is the reporting sequence. No need to inform unless required by law or rules or regulations. Otherwise, it becomes a professional misconduct. So reporting to authority is not required. Next, reporting to shareholders in the audit report. No sufficient and appropriate evidence from the management. Qualify or disclaim the report. Non-compliance due to circumstances. Adequate disclosure in financial statements. Then unmodified opinion should be given by giving emphasis of matter paragraphs. Non-compliance due to circumstances, adequate disclosure in financial statements is not given, then qualify or disclaim the report. Qualify or disclaim the report. If there is no appropriate accounting of non-compliance is there, then qualify or give adverse opinion. Either qualify the opinion or adverse the opinion. Give adverse opinion. Reporting to those charged with the governance. If those charged with the governance and management are same, no need to communicate again. All non-compliances need to be informed to those charged with the governance unless inconsequential. Inconsequential means immaterial. If material plus intentional, then inform immediately. Those charged with the governance or management involved, then inform to higher authority. If there is no higher authority, take legal advice.